Right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I don't know about you guys. I'm ready to get this analysis going, I guess. Yeah, it's been one of those kind of sessions, right? You know, things are just kind of so slow. It's like, man, all right, I guess we got to do it. So let's go. Well, you know, the euro dollar is pretty straightforward. I mean, I think that everything that we see here is very, very easy to analyze. Now, first of all, I want to throw out a big congratulatory shout out to Paul Franco. He's like, yeah, that 109.60 level is going to hold. It's the 618 retracement. We were talking about it yesterday, right? And man, he nailed it. So if you guys didn't, if and remember, we were sitting here yesterday morning, and I know I was not feeling well. We were sitting here yesterday morning, and I said, hey, if you want to go along the euro dollar right here, what's your risk, right? So what's your risk? Your risk is, maybe 20 or 30 pips, for a move back up to 110, 110, 20 or whatever. And you're risking 20, 30 pips to make maybe 60, 70, 80 pips. And I think some of you took advantage of that, which is good. I mean, I told you I wasn't, and I didn't. But man, we reversed really hard. I mean, we really, really reversed hard off of there. Now, Sam, who might be listening right now, he pointed out to me that there's a descending wedge, and so we tried to make this probe above this trend line yesterday, but the market just went into a standstill, and that the problem with with lack of follow through is when there's just nothing happening in the markets in general. You just get this kind of just slow, meandering around, and so I wouldn't write off the euro dollar, but I also wouldn't get extremely bullish here until you break through this resistance. This resistance is going to be key, and I know it's just a few pips away, and frankly, we may break above it. We may break above it here after the data that's released today. We have weekly unemployment claims. We also have core durable goods orders all happening, here after, momentarily. So, first level of resistance is 110.50. Now, I don't want to just write down that resistance, though. I don't, because I think it could be breached really easily, and we're basically there. So what I'd like to do is I'd like to get rid of this fib, because we know we stopped at the 618 right there, right? I'd like to see if we break out, how far are we going to go? Where's the 38% retracement of this move? And I think that's going to be key. So you can see this is also a 24% retracement, this 110.50. So the 38% retracement comes in right around 111.10. I think that's doable today, especially if we break here. So if we break this 110.50, 111.10 is not out of the question. 111.10. Okay. Now we are still in a range environment, like bigger, longer term range environment. Oops, wrong setup there. As you can see, it's here's the daily chart. We're just bouncing around quite a bit, but the move out of here should produce at least a 38% retracement. That's coming out of a descending wedge. All right. Now, resist or support, on the other hand, support really comes in at 110. I mean, that's the bottom line, because if you really want to put the downside back in pressure, you're going to take out what right now is viewed as the right shoulder, right? I mean, I guess we could dip all the way down to here, which would be 109.80, 90, really. But we're trying to develop this inverted head and shoulder pattern, right? Hey, thanks, Andy. I was just going to tweet that to him. Somebody tweeted me and asking for for the webinar link. Thanks, Andy. I appreciate that. Um, so you know, trading dips down here or buying dips down here, maybe even below 110. I mean, that seems logical too, right? Like let's say the data comes in strong. Let's just you know, argument's sake, you know, we get some strong U.S. data comes in, um, and that pushes the euro back through 110. We trip some stops, take out the stops just below there, and then we reverse, right? And it's possible, right? So anyway, I'll write down. I don't know if I want to write down 109.90. I'm going to write down 110, but just don't get too, you know, don't get super excited if it breaks through 110. Okay, you know, you might want to give it all the way down to like 109.85 or something like that. Okay, yeah, as you can tell, I'm not super excited about the euro right now. Now, if we break above 110, I think there's going to, you know, give us a nice little swing higher. I'm still not really feeling 100%. I don't know how much trading I'm going to be doing right now. I still feel a little foggy, but you know, for you guys that are, you know, for trading, I think if we break through the 110 level, that might you know, get the wheels going a little bit towards this 111 and change. All right, let's go over to the cable. So there is a Brexit poll that just came out, and the reason why the pound started to surge like that is, you know, a Brexit poll that was just released that said, you know, 44% want to stay and 40% want to leave. New poll. I don't know what kind of poll it was, but you know, we were down here yesterday looking at the cable around the 139 and said, you know, as long as we stay below this 140.50, it's bearish. Now we're making our way back up there. If you guys want to short the cable, that's the place to do it. That's gonna be the place where you can put in a tight stop. If you get stopped out, you know, you know that the cable's probably going a lot higher. But it's really the what I like to call the bull bear line in the market, because as long as we are below this previous support, current resistance, you know, I have it really drawn right there, that low right there, 140.56. So 140.55, that is key resistance. Like I said, if you guys want to get short, you could probably get short the cable there, put in a, you know, 30 or 40 pip stop, you know, and if you're wrong, you're wrong. But that's going to give you the you know, probably the best risk reward for a short if that's what you're looking for. We are in a bearish trend, okay? Support right now, apparently just below 139, or actually right at 139, right? 139 is holding a support for right now. It's minor, but it is support. Okay. Let's go over the Swissy. Now the sentiment in the Swissy has improved a little bit. You know, obviously, you know, the Brexit fears have really, you know, shaken up the Swissy, and you know, I personally would love to be long the dollar Swiss. You know, where would I like to be long the dollar Swiss? You know, not here. You know, closer to 96.50 or 96 cents, you know, somewhere down here again, to do it all over again. I'd love to be long the dollar Swiss down here, maybe 96 cents, somewhere right down here. Okay, being long right now, you know, especially with the Brexit fears running rampant, I don't know. You know, I don't. This, to me, this is too mid-range at the moment. Right. No, that doesn't mean it won't. You know, the dollar Swiss won't make a stab higher, but right now, parity is holding it. Obviously, let's see what this supports. What supports holding us up here? Low, high. It's a 38% retracement. It's not even really good support. But this is that hourly support there. So, you know, frankly, you know, as far as the Swissy goes, you're stuck between parity and 98.50. I don't think there's a whole lot to do with the Swissy here. You want to, when you get to these, extremes of these ranges, you might want to, maybe, and you guys know this is not my cup of tea, but, get on the short side here, put a tight stop, or you get down here to 98.50, you get long and you put in a tight stop. I'd rather do that trade if I was going to do anything with the Swissy, but if you're going to trade the Swissy right now, there's just not a lot of opportunity at this moment. Okay? Um, okay. Let's go over to the yen. So the yen, what a big, pivot off of support yesterday. All right, that was huge. Personally, I'm going to, I'll go ahead and just state the obvious. This is a big head and shoulder pattern. I think we're going lower. Like, if you short the dollar yen right now at 112.50, you close your eyes for like the next 2 months. I think when you open it, you will be somewhere down here. Now, does that mean we're going to go straight down here? Probably not. The way it looks right now, it looks like we're going to stop. We obviously held support at 111. We cracked this resistance. We're heading back to 114, 115. I hope we do this, and I'm going to short the hay out of it up there. That's what I'm going to do. Now that's going to take a couple of weeks or maybe a week to play out, but that's what I'm hoping is going to happen, guys. I'm really, really hoping that we get a move up here. This is where the hope trade comes. I'm not hoping because I'm in a trade. I'm hoping something will happen so I can take a trade. Big difference. I hope we make a move up to 1550. I want to lay on to the short side. Also, keep in mind the BOJ. The BOJ meets, I think, the second week of March, if I'm not mistaken. I have to go back and take a look at the date. It's all ran together after I was sick, so I'm going to have to double check everything. But anyway, that might take us into the BOJ meeting. People might speculate that the BOJ might do a little bit more stimulus, which I don't think they will, but Abe said they're not going to, they don't need to, but the BOJ may see different, Anyway, resistance right now is right here. It's the overnight highs. If we take out this 112, I'm going to write down 112.62. Actually, you know what I'm going to do? Skip that. I'm going to write that down. 112.65. We take out 112.65, we're going to start to squeeze. If you think we haven't started squeezing already, we're going to squeeze some more. Okay, that's going to create a squeeze, more of a squeeze. This is range bound, by the way. So what did I say? 112.65. It's bearish. It's bearish, but it could get bullish intraday, you know what I'm saying? Maybe even for the next couple of days. And by the way, just so you all know, that will stay bearish while we stay below 116, period. Thank you, Tom, for all the recommendations for health drinks. Thank you very much. I don't get sick too often, but man, this one, yeah, this is this sickness that hit me. Whew. And you guys know this, obviously. As you get older, it doesn't get any easier to shake off either. Okay, so here you are, 112.60. All right, support obviously is at 112. If we break back below 112, it puts the downside back in pressure, back in play. All right, 112. That's key support, and by the way, this is key resistance. So let me put an asterisk there. Shake up this market a little bit if we break through that. Let's go over to the dollar Canadian. So, as you guys know, we were talking about it before you all came here. I think 136 is really, really critical. Okay, very, very critical support. Um, the 136 level, I really don't think it's going to get breached until crude oil starts to move. But like I said earlier, if the Canadian makes a move below 136 and you get short, which it could very easily happen here, this morning. I mean, we're only 20 pips away. Those stops below 136 look pretty juicy, I have to admit. The market's probably looking at anything below 136 and saying, I'm going to take them out. If we get below 136 and we stay below 136, the only way we're going to stay down there, in my opinion, is crude oil is going to have to really start to rally. I was talking to my best friend, and we were talking about, it was like yesterday afternoon. It's my childhood friend, and he's on the other side of the city from where I live, and he was like, "Oh my God!" He was on his way home. We were talking about family stuff, and we were talking for like a good 15 minutes. He was on his drive home last night, and he's like, "I got to stop and get some gas." He goes, "Oh my God, gas is $1.39, $1.39 here in Phoenix." I mean, that's like crazy. Yeah, I don't, you know, I don't, I don't see how prices are sustainable at these levels, but hey, whatever. Let's enjoy it while we can. Anyway, 136 I think is key support today. I'm gonna pull up a couple of other numbers though really quick. I don't want to just give you 136 because I think 136 is the round number, and we could trip that right now. But what I think we should do is look at this. Okay, let's go over to an hourly. Let's take this last, I guess it'd be this low. Okay, this is probably the way we can do it. Low, right? High. Maybe we'll just take this last move. That's not what I want. Give me the, no, damn it. Don't, don't piss me off. Thank you. There we go. Okay. Notice we're at 127% extension right now. So that means if we take out this 136, Jesus, this thing is going to go. Geez, I meant to say, geez. 135.38. Okay. All right, if we take out those stops, oof, it looks dangerous. 135.38, 35.30. Let's just call 40. 40. I'm just going to leave it like that. Okay, if we break through that 136 level, okay? Yeah, 135.40, and if that breaches, gosh, we're getting close, so close. Tripping those stops. Okay, because if that goes, then you're going to see stops probably get taken all the way down to there. All right. Resistance. Well, any move to 36.77, and anybody who's long right now is going to be so happy to get out there that I don't know if we're going to make it up there, but 136.75. All right. And we're in range, but we're threatening to turn bearish here. We really are. Really are. Okay. Kiwi. So here we are on the Kiwi, and I'm going to delete everything really quick. Okay. we could draw all these trend lines and say, oh, how about this and how about that? Like, how about this? We're there, and I mean, this is all you can see. We're basically just threatening to really start squeezing here in the Kiwi too. Okay, let's go back and remove that. You guys see that? You see how we're just really threatening to break higher? I just got to keep an eye on that, on this Kiwi here. I'm going to write down 67 and a quarter. And if we break, I mean, the longer term implications are if we break these, like all these resistance levels here, it's going to be pretty bullish for the Kiwi. It really is. Okay. Kozman, we just looked at the Canadian. We just literally did the dollar Canadian analysis just a minute ago. Did you just get here? He said, "Hey, can you look at the dollar Canadian?" Yeah, we just finished that analysis, man. I can't go back and redo it. Okay. Um, 67.50 is going to be really critical. I mean, we have some resistance here at 67.20. I'm going to write them both down, but okay, that one's critical because if that breaks, just look at this longer term. Okay, so this is the Kiwi, right? Go out to the daily chart and then do this, right? And you can see I mean, we're vulnerable to a real big. I mean, the Kiwi can start a real big correction back towards 70 cents, maybe 71.50. Like this would be very doable right there if we get going. Okay, especially if you think about the dollar Canadian. Breaking through 136, heading down to 131. Taking the euro dollar back to 114, 115. It's all very doable, extremely. So I would keep an eye on I would keep an eye on you know the Kiwi, the euro. The cable looks like it wants to recover. Support right now is 66 cents. We're in a range, threatening to break higher. Let's go over to the Aussie. Now the Aussie, the capex numbers came in really strong. Oh, you know what? I just realized what time it is. I'm going to put you guys on hold for just a minute. When I come back, we will finish up with the Aussie. So don't go anywhere. Thanks everybody for being here. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We were just going to get started on the Aussie. And like I said, the CapEx numbers last night, they came in better than expected, and the Aussie slipped. I didn't see any downward revisions, none that I saw. I wasn't around watching the price action. I just saw that the Aussie sold off. You know, regardless, the Aussie did pull back following the capex numbers, and then we've spent all night just kind of recovering a little. But I think the Aussie is in a very similar situation to the Kiwi. We're in this really tight range, and we're looking to break higher. And it's probably like I said, a very similar path to the Kiwi dollar. If the Kiwi starts to break higher, the Aussie's probably going to start breaking higher as well. A lot of long wicks down here. I mean, it looks like there's been a lot of wicks on either side of the market recently, but the last couple of days, long wicks are developing. So the dips are being bought. I would say that, obviously, you got intraday resistance that we're pushing right up against, but what's really critical today is going to be this 7250. 7250 is just, a big deal. So 7250, I'm just going to mark up and put an asterisk, and, just note that we've been, what's up with that? Just note that we've been on the you know the, the other side of 7250 by a couple of pips before reversing already. We've been up here 72, 7256, 7260, then pulled back. So just in case we start to make a run for it, it doesn't, you don't get too excited just because we got there. All right, now support is going to be right down here at 7150. We happen to be right in the middle of the range. Okay, so you got 7150, 7250, and we're just stuck right in the middle of the range right now. I'm not too excited about it at the moment, but I think the potential of dollar weakness is really high at this moment. All right, I think the potential for the dollar to weaken here is pretty good. All right, let's go take a look at the dollar index. Okay. Man, that Euro Canadian. I know we were looking at it earlier, but here's the dollar index. All right, let's go over to an hourly. Let's go back out to a 4-hour really quick. All right, so we stopped shy of that. We stopped shy of this the 618. Okay, which is right here. All right, now we're approaching. We're approaching some support, which the reason why this support's so key is because this would, this would cement a lower low if we break it. So I think that's why we need to pay attention to it. Okay, so this right here. Okay, 97. What's that low there? 97.23. Okay, then we have resistance here at 97.60. So I think those are the numbers we have to write down, and we have to be respectful of. Oops. 97. I'm just going to write down 97.20 and 97.60. I mean, it's tight, guys. I mean, it really is. 97. It's 22, but I'm going to write down 20. Okay. Because if we start printing down in that area, that means we're making lower lows, which is not good structurally, technically, for the dollar. 97.60 is resistance, and we are in a range. All right, let's take a look at the peso. Now, the peso is stuck between 18 and 18.30. What did we write down yesterday? 36. We hit 18.36 yesterday. 1836.80, and then reversed like a bat out of hell. So really, I mean, shows you the here, let's get rid of this. Let's grab this. Shows you the well-defined range right here that we're in. And you guys know I'm the only thing that really is going to, it was yesterday and really is probably today as well, the only thing that's really going to provoke me into getting into a trade is, again, the US dollar Mexican peso back up here to the 38% retracement. I'd love to be on the short side up here, but I just, I don't know if it's even going to happen. So 118 or 1836 and then 18, really strong support, and we're just kind of lower mid-range, but still there. Okay. And I only want to play on the short side of this one, so, but I want to do it on rallies versus down at where we're currently at. 18.36. Oops. I'm going to put us in a range in the peso. Okay, let's go over to the let's check out the Nordic currencies because we didn't look at them yesterday. We kind of because we had Joe. By the way, did you? I want to ask you guys. Did you guys enjoy the interview with Joe Acevedo? Did you guys enjoy that yesterday? Trading Points. I hope so. He's a really neat guy. Really neat guy. Extremely smart. I got a lot of great feedback. So yeah. I'm hoping you guys told him, what a great interview and thanks and all that stuff. So he's yeah, he's great. I'm glad you guys enjoyed it. That's good. Oh, that's good. A lot of you guys sent emails to him personally. That's awesome. Okay, cool. Thanks. Yeah, that's nice. Because he actually he actually went he did more preparation for his presentation with us yesterday than anybody that I've ever had here. That I know of. I mean, now Ed Matz does a lot of preparation, and so does Chris Baird. Actually, I take that back. Everybody does a lot of preparation, but Joe, he did a lot of special preparation because he's never spoke like through a microphone to a group of people. I think he was more nervous than anything. So, but he did a great job. I really, I'm glad everybody enjoyed it. All right, cool. So here's the Norwegian krona, and you guys can see it's it's like, what do you do with this damn thing? I don't even know what to do with it. Let's remove that for a moment. Okay. I mean, this is one of those currencies too. I mean, if for some reason, crude oil starts to break higher, you've got to be on the short side of the US dollar Norwegian krona. But the thing is stubbornly strong, isn't it? Stubbornly strong. Yeah. I mean, like amazing. But I don't know what to do with it. It's like I don't know. I like personally, I don't know. I'm only going to trade it directionally if I see oil start to move. And right now, like oil's been grinding higher. I don't understand why we haven't been moving lower. That's why this doesn't make a whole lot of sense to me at this point. I'm going to leave it off the bias chart right now because it doesn't make sense. So here's the US dollar Swedish krona talking about wanting to bang your head up against the wall. I think this would be um, this is like if you're trading the US dollar Swedish krona right now, you're probably throwing your head into a cement block, day in and day out, trying to figure out why the hell it's not doing anything. And I'll tell you, if it breaks this, it might actually get some move on, but I don't know. I can't, it's like it's not doing much either. So it's best to leave it alone when you're not seeing anything develop. And I'll tell you, when the Swedish krona moves, it's a mover. It just, there's not a whole lot of interest in it right now. Okay, so here's your bias chart. It's done. Now I'm going to take some questions. Let's go to, I'm going back to the way back earlier. I didn't get an opportunity to answer everybody's questions yesterday. Thank you all for your questions. Obviously having Joe on, it was near impossible.